Hey guys, welcome back to another video. Today I want to talk about the trade I took this past Friday to help me catch the low of the intraday session. So we're starting off on Nasdaq's 15-minute time frame, and whenever I'm prepping for a New York AM session, I'm asking myself, what is the current trend and where is the clearest dealing range? Now, what we see here is that price comes down during London, sweeps sell side, sweeps another swing low right here, posts London low, starts to expand, and then right upon 9:30 we see a high made. Okay, so London low, which is right here, is going to be anchored for my dealing range low, and the intraday high is going to be my dealing range high. Now, utilizing those two levels, you can see on the right side here we have 50% is 24,73625. Okay, now the simple principle of a high probability long is waiting for a return to a discount prior to entry. So if I've seen that, if I zoom out here, actually, price is already expanding ahead of 9:30 open, where I'm trying to operate in that session, the New York AM session, and running a lot of this liquidity, and it even bumps this high. It's a shallow stop hunt, but it does technically bump that high. I need to wait for some sort of retracement instead of just chasing up here at the highs, because I understand, again, the better setup is going to come after we return to discount. Okay, so if I'm looking at this range and understand 50% is right here, I want to look for a long somewhere in the vicinity of a discount as we see right here. And if I just progress this forward, price does return to a discount, and great reaction off of a midnight open up to high of day, which of course we're trading at all-time highs. So we have this extremely strong bullish delivery on our side, and I want to position myself in line with that higher time frame trend. So not only do we use dealing range discount for an expectation of where we think it's likely for price to go prior to continuing higher, but we want to go down to the 1 minute time frame to even understand the likelihood being increased even higher that we were going to come down here prior to continuing forward, and how we can ultimately frame a trade entry around it. So I'm going to go to the 1 minute time frame, and I know what you're saying. There's a lot on this chart, but I will break it down for you. Okay, so again, scrubbing back, this is London low, that dealing range low that we just spoke about on the higher time frame, and then you have the high of the intraday session. Okay, so there's a few main things I really want to discuss here, and we're going to start with the high. Okay, so let's actually even start at 9:30 open. And there's a lot of lines on the chart, so let's make this dealing range a little more prominent. So this purple line you see here is 50% or equilibrium of the dealing range that we have laid out here. And already, what do you see upon 9:30 open? We go lower and we leave relative equal lows right around equilibrium of that dealing range. Now, already, whenever you see equal or relatively equal lows around a 50% level of a dealing range, that is a very strong draw on liquidity. Now, on top of this, what do you notice below? You have the new day opening gap as well as the midnight fair value gap. Now, the midnight fair value gap is the first presented fair value gap after midnight or 12 a.m. Eastern time open. And just to be clear, if I scrub back, this is on the 1 minute time frame. In this case, for the midnight fair value gap, you have 1, 2, 3 consecutive fair value gaps that forms that midnight gap. So I'm utilizing that as my anchor for today's midnight gap. Now, that is a very significant PD array for me in general when we see a prominent midnight gap, but especially when it's one of two things, coupled with another key inefficiency, like here we have the new day opening gap, and right below a discount of a dealing range when we are bullish. So understanding that framework, okay, that we have equal or relative equal lows right at equilibrium and two key inefficiencies down in a discount of our dealing range, I want to be very cautious of longing when we're above a dealing range discount, or in other words, a premium. And this is what I spoke about on the YouTube live stream. Actually, if you go back and watch that from this past Friday, all the live streams going forward will be recorded and left on the channel. We'll talk about, you'll see me talk about this setup here, right? And if you guys are familiar with my model and the way that I engage with price, I heavily rely on macros for entries, for bias, sometimes even for, an entry checklist, a specific criteria. And I have plenty of videos on the channel discussing that. If you guys are new here, go check that out. But here, we're in the 950 macro. Now, I guess on this point for my model, this is macro open right here. I'll just draw a quick line depicting that. And for a long, right, I want to see price go below that opening price, run a swing low, and then give me an inversion. Now, it does just that, right? But this is why you can't just pattern trade, even if it is macro power of 3, right? If I was just to pattern trade this is a losing trade. And this is a low probability trade that I told you guys on the live stream in real time that it was unlikely to fail. Or excuse me, likelier to fail. I'll keep that in there because I'm a real one. But we get that close above. I'm not rushing into that just for pattern's sake and saying, oh, it needs to go higher. What if it leaves without me? I don't care if it leaves without me. I'd rather wait for a better setup. Okay. Now, on top of this, okay, I want to talk about what occurred over here. Okay, because the entry, as you see here, came over here later in the day when we posted the low of the intraday session. But right here, okay, this is actually in the 1050. Let's annotate this so everything's clear. This is in the 1050 to 1110 macro right here. Okay, now you guys, again, who are familiar with the way I utilize price, if I'm bullish and we have a first presentation fair value gap, in this case, the 930 fair value gap, if I see a close above that during the macro window and I'm bullish and we have all this engineered buy side liquidity, I'm expecting price to spool to those highs. But why is this a bad setup? We leave those equal lows to the tick. So this low over here formed around 855 is on the right side there, 24,734 even. Okay. This low posted right at 1047 ahead of the macro window, okay, is that same level, 24,734 even. Okay, so having a rule that I can't long with equal lows helps me weed out these low probability setups from my system. So once I see those equal lows, and I also understand we still have not delivered to the new day opening gap and as well the midnight fair value gap, I'm saying, okay, wait until we deliver there. It's more likely, it's super clear we're going to have to deliver down there. I want to see the equal low swept and the reaction off of these key inefficiencies. And lo and behold, price does come down, okay, deliver to the new day opening gap. Look at the bodies, respect that. Delivers to the midnight fair value gap, runs these lows, okay, and then expands higher. Okay, so let me clean this up a bit. Now, what I'm waiting for the final entry confirmation is the inversion. So price comes down and creates this, I call it a false SIBI, and we wait for the close above because the bodies tell the story. You see the bodies respect these key inefficiencies. This closes the entry, and I want to see price run to all of these highs up to AM session high. Okay, so already, not only do we use key inefficiencies and trends to determine and paint the framework for a trade, but when you see this clear as day trendline liquidity, ultimately with AM session high, which is the all-time high at that point, it's the clearest depiction on what your bias should be. So what does that mean? I'm definitely not looking for any sort of shorts down here, okay, after we run these lows against the higher time frame trend, etc. Okay, and I'm sure a lot of you guys are looking at this as well. I had a few comments on Twitter. I posted this setup I took already this past Friday after it played out. But this right here, my entry was at 1133. That is outside of a macro window. And you guys know I will typically 95% of the time plus take my trades inside that macro window, whether it's macro power of 3 or I'm anticipating a spooling macro. When I am operating outside of a macro window, it has to be super clear. That's the subjectivity to it. But the objectivity to it is that it has to have an SMT. Okay, so as you see here, you have a 1 hour SMT. And if I go up actually to the 1 hour time frame, that occurred, okay, this isn't in replay mode, but that occurred right here, right, from this past Friday. This 1 hour swing low, 6 a.m., was not taken on ES. So when I see everything we've laid out. And I also see that 1 hour SMT, after this close above, there should be nothing else for price to do. By extension of that, once we enter the 1150 macro, zooming in now, right around here, I want to see it spool upwards. Okay. Now, lastly, this is a good example of understanding narrative equal lows as well as first presentation fair value gaps with macros. So over here, we're still using the 930 fair value gap. And I mentioned this was a low probability setup, this close above, because we had the equal lows below and we still had not delivered to the new day opening gap or the midnight fair value gap. But once we've had that clear sell side manipulation, then we get the close above during the 1150 macro. Now it's much more likely that signature is going to be respected and price is going to spool higher as we see it do beautifully through all these highs. So beautiful delivery this past Friday. It's nice to see the market start to move a bit more freely. Hopefully that's the case again this week. Let me know in the comments if you guys have a question, a comment about anything relative to this past week, this trade, or what your expectations are for the upcoming week. I would appreciate a like and a subscribe if you are not doing so already, and I will talk with everybody soon.